cool. Hey guys, so we're just waiting for everybody to join. Today's training is going to be on recognizing when to enter into a long and when to recognize to take profit. And we'll just wait for Sid to join us, and then we will get started. I'm going to do some.
Sorry, it kicked me off. I'm back.
Oh, that's no problem. Yeah. Yeah, I'm just going to mute you for a bit. Yeah, so and then obviously we're going to have lots of question and answers because this is a training and we want to make sure that you get the most out of it. So no, just join us in Zoom. We are already started. Great. Okay, so let me share my screen. Megan, how long have you been trading for?
A little over a year or so.
Oh, cool. Great. What coins do you trade?
Mostly Bitcoin and Ethereum on leverage trading. And then I have a whole bunch that I just invest in and hold. Great. So one of the things that I did in the TA a few days ago, as I said, if we come up above this line here, like if we get up above 39,157-ish, there's not a lot of resistance above us. So we could shoot up, hit this a little bit, or come all the way up here, which is exactly what we did. We just shot up. This is the VPVR, which tells you how many shorts and how many longs are traded in this zone, so we know where heavy trading zones are.
Hey, Nicola.
Hello.
Yeah, it must be mine. If you both can hear me,
yeah,
I'll fix it. Thank you.
No worries. But what we've done is we have fulfilled the head and shoulders, and we have fulfilled the W with this wick. And I said this morning we could wick up here. We might even wick all the way up to there. So now we're right under the golden ratio, which is a very significant resistance, which I said this morning again, and this is significant resistance. But the good news is, I think we are due for a retracement. Look at the RSI, we're really high. The good news is the monthly candle closed out of indecision. So if we look at this,
so we have a new monthly high.
We have a new monthly candle close, which is not
nice.
so much of a spinning top. Before it was looking like it was going to be a spinning top, which is an indecision candle, and we opened at a really cool level, but we are at resistance. So how do we know when we should long? And one of the first things that I always like to do in my charts is put in the Fibonacci level from the previous all-time high, swing it down to the previous, the beginning of the ascent, which is here, right? This is where we bottomed out and we started to, that was at the big, the end of the bear cycle, and then we came up and we started our ascent. So that gives me the whole bull market structure of support and resistance zones. And if you look at these zones, I've also got some green bands here, like this green zone here, green zone here. These are support and resistance zones that you can see that have been respected really well. Can you guys mute yourself unless you're wanting to put your hand up and ask questions, because we're getting a bit of feedback? Thanks. So we're right at resistance, and you don't enter a long at resistance. You enter a long when we are bouncing off of a support level. So to enter a long, I always start with a 4 hour. I go, where are we on the 4 hour? And on the 4 hour, we've had such a big run up that we are due for a little bit of a retest. Now, because we've got this head and shoulders, like I look what is the pattern? If there is a pattern, there's not always a pattern. We've got the head and shoulders and we've got the W. And actually, let me just take these lines out and start again. So we look for the patterns. I kind of like go through it step by step. So here's the head and shoulders right there. It's a bit weird, but it is there. So this is a line that we could come and retrace back to. We could come back down and retrace to 39,319. This is also a W. So that is another indication that we could come back to there. However, if you have a look at the bigger pattern, see this is a descending wedge. We've broken out of the larger descending wedge we've been in for 3 months, come back down, perfectly retested as support, found support here, which to me tells me this is the bottom of this whole thing, which is a higher low from here. So that means we're now looking to see where are we going to create a higher high, which would be at above 45,989. So I'm looking at all of these things very, very methodically. And I'm looking at this and I'm going, whenever we shoot up like this, we are usually going to trade sideways under the resistance. And this will be a bull flag. And then we will enter into a long, or we could do a retracement back down to this level here, 39,835, or this Fibonacci level at 3850. Could come back down to the 50% here at 36,478. So I know that we're probably either going to have a retracement or consolidation. So now I'm going to look, where is a really good long entry? I'm already in a long, already took profit because I knew we were going to get rejected here as per my morning TA this morning. So took some profit, still in the trade, but I'm looking at getting back into the trade again by adding more to it. So I go to the 1 hour, I go to the Ichimoku cloud, because the Ichimoku cloud gives me future. It gives me an idea that we may retrace. See how this line is coming down on the green Ichimoku cloud, and then it's very steep. This is an indication that we could retrace, and then we could take off and we could pump. I also know that tomorrow is a new moon. And let me just get rid of some stuff here so it's all clean and tidy for you. And new moons, we often find the top of the market. So if we've been going up, a new moon will usually be around about where we top out. And then either the day of the new moon or a day after or a few days after, we start the retracement. So we're due for a retracement right on the new moon. And new moons, look at this, new moon had a heavy dump last new moon. This new moon here had a very heavy dump. This new moon did not. This new moon just had a small, because we were pumping upwards, we were creating higher lows. This was just a small retracement, and then we kept pumping. So the question is, what's going to happen tomorrow or Wednesday, right around where we're due for some kind of a retracement? So I'm not entering along. What I'm doing is I'm setting my alarms, and I'm also looking at my Fibonacci levels on a smaller time frame. So I will go to where we bottomed out to see where the retracement could be. So this is the movement, new Fibonacci levels drawn on this movement, and it topped out here. And I look for the 50%, so which has confluence with the 50% has confluence with a retracement back down to this level. So what I'm going to do is I'm going to start putting in alarms on my trading view at all of these different Fibonacci levels below me, so I can see when we get a bounce. If we get a bounce off any of these levels, I'll look to the RSI to see if we've got room to go up. I'll look to the volume. I'll bring in the Ichimoku cloud on the shorter time frame. I might start at the 15-minute. You might want to look at my Ichimoku cloud training that I've done. And I'm seeing that this is very bullish, but if you look at the RSI, we're overbought on the 1 minute, which means we are due for a retracement. So everything is telling me we're due for a retracement. So what I'm going to look for is a bounce off of one of these lines. And I'm busy. I don't want to be looking at the charts all day. So I go over to my trading view and I will put in all of these levels for the alarms to go off, so that when they go off, I can come in and have a look at it or check it on my phone and then re-enter the trade. So that's one way. That's one way of looking for the entry, is bouncing off of key support lines when we are in a clear upward trend and we have bullish momentum on the Ichimoku cloud on the 4 hour, 1 hour, and even on the shorter time frames. Does anybody have any questions about that so far before we go to the other way that you look at whether or not to enter into a long position?
No, I'm good.
We're good? Great.
Yeah.
So in my other Ichimoku training, I showed you that the other place to enter a long is on the 4 hour. And I'll just take this out so that it's not so busy. When the conversion line of the Ichimoku crowd is green or blue, depending on what you've got in your settings, and the baseline red is under, right? And then we've got green in front of us. In this case, we don't. We have red, and we've got a straight line, which again is pointing towards a little bit of a retracement. And we want the lagging span above here, and we want to be above the Ichimoku cloud. So we have 3 bullish signs here, but we don't have the 4th to enter the long. So now we go down to the 1 hour and we look for the 4th. And again, we got a red candle. We want to wait for the retracement and the bounce off of the retracement to enter. So that's the second way that you can enter, is using the Ichimoku cloud. And I use Cracking Cryptocurrency Ichimoku because it's set to where are we? Here it is here. Cracking Cryptocurrency Ichimoku, because it is set to the set to the cryptocurrency market, not the stock market, which is what the other crypto.
Nicola, quick question.
Yeah.
Now, before this 1 hour, you were in the 4 hour, right?
Mm-hmm.
And in the 4 hour, we had 3 indicators which were showing bullish because the lagging span is above the clouds.
Mm-hmm.
We have the green candles over there, right? And then the green is over the red. So those are the 3, right?
Yeah.
But the cloud going ahead is flat and it is showing red. There's no green over there.
And
So
it's being confirmed by the fact that we got heavily rejected off of the Fibonacci level, as well as this green line, which is the green channel resistance. So
and we also see that
have resistance. Yeah.
And we also see the even though the volume is okay, the RSI is already overbought here, even in the 4 hour. Yeah, right. Yeah. So there we have 3 indicators which says positive and then 2 which says negative. Yeah. So that's not good enough. So that's why we come back to the 1 hour.
Correct. And so basically what this is saying is the overall trend is bullish, but we are due for a retracement. It might not be a big dump. It might only be a retracement back down to this support line, in which case you're going to find a better entry point. So we come down to the 1 hour to watch for the entry point, and we see already we have a red candle.
Got it.
So this might be a bull flag. So I'm going to put my lines in here, and these bull flags are really horrible to trade because they're creating higher lows. So we're going to watch that, or it could turn into a Bart Simpson. I picked the Bart Simpson. I don't know if you guys watch my TA, but I put in there, yesterday and the day before to watch out for a potential Bart Simpson. We got the Bart Simpson dump.
We got it. We got 2 Bart Simpsons. We got an inverse and a Bart Simpson, a proper one.
Yeah, we got the dump in the pump. Yeah. That can happen. Yeah. So if this was me, the other way to enter into a long is bouncing off of a support line with confirmation on other areas. I would be putting trades in 2 places. The first one is if we do retrace,
bounce off of this support, come up, have a clear candle above the bounce. We come back here, boom, bounce, and we've got a clear bottom on the 4 hourly above here. We've still got green Ichimoku cloud on the 1 hour. We still have all of the bullish momentum on the 1 hour, because at least if you're day trading, this is probably going to head back on up here and retest this as resistance. Now, if we go to the 4 hour, once that bounce has happened, ideally I would like to see a green. If I don't see the green, it doesn't mean to say I'm not going to enter the long. It just means that I'm not going to hold it open, because we don't have overall trending bullish momentum. It could just be another day trade move or 2 days trade up to resistance again before we come back down again. That's kind of like what I would do. The other place I would enter is because we've got a very, very clear resistance line here with that green channel, those green channels that I showed you. Here's the bottom here and there's the top there. It has confluence with the golden ratio structure of the entire bull market. I will wait to come above the golden ratio and then a bounce off of here and then coming back up. Also, it is new moon tomorrow. So tomorrow afternoon or Wednesday afternoon, we could actually see quite a significant retracement or not. We have to wait and see. There's no guarantee that a new moon means that the market has found its top and now it's going to retrace. But it is a pretty consistent pattern that we do get some kind of a little ripple effect when the new moon comes into play. I don't know what time it comes in. Let me just check that.
Nicola,
yes.
quick question. I remember in one of your TS, you clearly mentioned that the bullish pattern is only until the end of March. Are you sure is the same? Do you have any difference in your TA right now? Like, or is your stand? You stand by it? Like
no, I've said that there are the places that we could start dumping the dates of, what is it, somewhere between the 25th of March and the 2nd of April. And if that doesn't happen, then it is towards the end of April into May. Like I gave the whole lot of dates and
yes, I have that. Yeah.
Yeah, great. Yeah.
Okay.
Yeah. So March could be the end of the bull run. However, and this is what I'm going to do on our live stream on YouTube on Wednesday. Willie Woo says, let's go on the weekly. He says he doesn't know if we are going to, well, he does know. He doesn't think we're going to have the parabolic run up that we've had of previous bull cycles. He thinks we're just going to have a drunken wobble and then come back down again, and then a drunken wobble up to the top and come back down again, and actually behave a little bit more like the S&P 500 over time, rather than the traditional, the traditional 4-year cycles from halving. And the reason for that is partly because the miners don't have the same level of control that they used to have on the markets, as well as let's have a look at this going over the monthly. Yeah, as well as the institutions are now, they are now here. So if you have a look at the way that this happens on the S&P 500 from here, we've not come back down to that bottom. And then if we come up from here, we've got clear support there, right? And we just have like these drunken wobbles up and then a dump, and then wobbles up, a dump, wobbles up, dump. We don't have that rainbow effect that if you follow this chart,
the parabolic run. Yeah.
Rainbow. Because even if you have a look at the Bitcoin rainbow chart, which you should be watching, I think every week you should be tuning into this, it's already showing a completely different pattern from the other parabolic run-ups. Like, have a look at this. See, we get
one, we come down into the yellow, we don't come down into the green, we come down into the green here, but that meant that we are continuing to go lower into the bull market here, tops out and the red comes back down. But this cycle, we didn't even get up into the red. We came back down into the green. We never did that in the previous sessions. Once we started going up into the parabolic run up. So already this pattern is very different, and the middle of the channel is the middle of the channel between the halving and what have you is sitting, January, February, March is sitting around May, which is when Saturn return is. My preference is that the Saturn return and the Mercury retrograde is usually when we see massive dumps for Bitcoin. Can you hang on a second? My neighbor's singing. I'm going to close my door. So if we come back to Bitcoin, where is Bitcoin? Where am I? This is the chart I'm using at the moment. If we come back to Bitcoin, see this very big dump here? That was Saturn retrograde and Mercury retrograde happening within a couple of weeks of each other to create a massive dump. And this was a Neptunian dump here. Megan, if you're still with us, I use a lot of astrology to—
Yes, I'm listening.
Yeah, to have a look at patterns to see if I can have dates that I have to be very careful of, right? So I am very careful about entering into a long at the moment until I know what the new moon is going to do. Unless, of course, you're scalping. If you're scalping and you're just getting in and out, there's lots of opportunity to just jump in, right? Like today, you could have caught the running train and just jumped in and rode it to the top as long as you got out at the top and didn't think it was going to keep going because we were at resistance. So given that we've got new moon tomorrow, what I'm doing is I'm either waiting for that retracement or I'm waiting to get above the golden ratio and confirm the golden ratio. So I know we're still continuing to create higher lows and creating an upward trend. And then I would just get back in on the retracement, because I don't want to get in on a trade that turns around on me and then and then I'm in a deficit. And how you recognize we're hitting resistance is usually it's a big, it's a bit like people drew Fibonacci lines on movements, which I did before, right? The movement from the low to the high, or from a bigger move. When you like from say this one to this one here, when you do Fibonacci levels from the entire market, you get market structure. When we have those really big dumps and those retracements, you can see these big Fibonacci levels get respected quite well. You also see that the resistance levels get respected really well as well. So it gives you, I think it gives you a better idea than the moving averages. And the reason for that is that there's a lot of retailers that trade the moving averages, and the institutions know that, and they will exploit that, right? So you got to be careful with that. Trading moving averages and thinking that we're going to go down to the moving average, and so you put your trade in at the level of the 200-day moving average or what have you, and it'll go lower, or it won't quite touch it, right? Because there's a lot of whales and institutional buyers that will exploit retailers trading by moving averages. So we want to be using more the bigger structure support and resistance lines, because that's usually what they're looking at. Yeah. So then how do you recognize resistance? Well, I knew with my bigger structure 2 very strong resistance levels, knew it even just by looking at the charts without even putting the Fibonacci's in. You can see a lot of resistance here, failure to get above this lots of times here, back here, the more further left we go, the more you will see that. So I knew that we were going to hit resistance at this level. So as soon as I get up to, let's have a look at this here. This is on the 1 hour. Where do I know to take profit? Like I want to stay in the trade, right? So I took 50% profit out of my trade. I just took a limit profit here. How did I know how to get out? Well, firstly, I had my alarm set for just under this green line, so I could sit and watch it to see how far it was going. And then I will go down into the 5 minute. And see this here, this 5 minute here, we got up here and then we went a little bit higher. We started coming back down. It's like, well, if we're going to start coming back down under the golden ratio or under the 50%, we're more than likely going to go down quite a bit lower. So I exited around about here because I could see that that resistance was retracing. And of course, not only did we go lower on that candle, we actually kept going lower a little bit. So at least I got some profit out. So now if we do a big retracement, all I'm going to do is add to my trade, dollar cost average in. And if we keep going up, I've still got skin in the game to capitalize on the continued bull run to the upside. And that's how you do proper risk management, in my opinion, because you're in profit now, so you can't really lose on that trade. Does that make sense?
Yes. Yes. Quick question. The green line that you said was like that was a support line. Sorry, the green line.
Green line here is a support line. Yeah.
Okay. And is that a specific? I mean, how did you arrive at that line? That's because of the touch points that you have had at that area range.
Yeah. If I go to the weekly,
Sorry.
I go to the weekly.
Okay.
No,
so that's a weekly line.
If I go to the weekly, you've got the golden ratio is of the Fibonacci's, but see these green channels here? Mm-hmm. That was done by touch points. Yeah.
Got it. Okay. Okay. And how do you, if I may ask, how do you draw that parallel channel? Do you start with, I mean, should it be like a higher highs to lower highs, and that's how you draw it?
Well, no, I'm doing where the most touch points are. So if I come over to here and I come down into the parallel channel, I can see that see how there's a lot of touch points here where it just keeps touching.
The wicks are just touching that and then coming back, and then it keeps doing that multiple times.
And then I go over here where it found nice support at the bottom candle, right? So I go, you know what? I'm going to call that the resistance level and the support level around about there. And then I'm going to draw it down to where the first candle is. Then I'm going to come in on a smaller time frame to just get a little bit more accurate. And so then what I did is, is I brought it down a little bit because I can see on the smaller time frame there's more touch points if I bring it down like that. And that, and now you can see it pretty much has confluence with the golden ratio of the entire structure of the So we are up against significant resistance right at a time when we often get to that's the top of the market. So we shall see what happens. I think there's a lot of positivity coming out with the whole Russian-Ukraine thing. I think that the markets are quite, they're quite satisfied with the way that that has been handled and how the international community is handling that. So I think that we'll see what happens in Europe tonight, as we're sleeping, and then we wake up to see the end of the European markets and then the American markets coming in. We could get over here, over this line here, or we could get the retracement.
And your parallel channel, you always draw it only within the golden ratio, or do you consider other fib levels as well?
Well, I will, when I do the parallel channels, I do them based on price action. I don't do them according to the fib levels. The fib levels are there to show me confluence. So I've got confluence that right here at this fib level is a golden ratio. The golden ratio is also price.
The support.
Yeah,
Got it.
so there's confluence there. That's why I had said this morning, you may look at taking some profit when we come here if you see us starting to wick above the golden ratio and then retrace, and that's exactly what happened. Yeah.
Is it the same logic? Sorry, go ahead.
And I just had a question about something totally different. You were talking about you had a long, and whenever it hit that, you took out 50% of your profits and you stayed in it. This is kind of where I'm at as well. I did sort of the same thing. So whenever you say we're expecting a retrace, how far do you think? Because I know we have support at 39-ish, a little higher, and then but I mean, I know we can also go way on up as well.
Yeah, well, that's why I will draw the Fibonacci levels from the swing low to get my retracement levels here, and to the top of the mark to where we just came, to get my levels as to where we could retrace. We normally, when we get a bigger retracement, we usually come down and touch somewhere near the green levels here.
Right. Yes.
Sometimes we don't touch it. Sometimes we come just above it, right?
Mm-hmm.
And sometimes we go to the golden ratio. We could only, see that we've got a pattern here. So confluence is right here, right? Right there, it touches perfectly. So it's possible we could come back down to 39,468, but it's also possible we might just retest 40,500.
Right.
Right.
Yeah.
So that's
Yes.
why I will set alarms. Yeah.
Okay. That answered my question. Thank you.
Yeah. Like I already have buy orders in at the golden ratio just in case we do get a bigger retracement. But it's only a
Gotcha.
Yeah. Yeah. There's the danger that we've got right now is that there is a golden ratio down here at around 27,835. So even though it looks like we're getting a trend reversal and we keep getting higher lows, that we are still at that possibility that we could come down and create a lower low and still be in a downward trend, right? So we really need to get above 46,000 and confirm 46,000 as a support level to feel confident that this is what's happening right here is actually a trend reversal.
Right. Yeah, that makes sense.
Yeah. Awesome. Yay.
Thank you.
You're welcome. Anything else?
No, I think I'm good.
Okay, cool. Well, that's the training for today. And I tried to get my my TA done sometime between 6 a.m. in the morning and 10 a.m., just depending on what my work schedule's like. So I'll do Bitcoin, Ethereum, and I'm really big on XRP. So watch out for those, and we'll see you there. Did any of you guys notice that my thing about my NFT collection that's being launched?
Yes, I did take a look at that in Twitter.
Cool.
Yeah, and I remember you actually explaining me about that in one of the sessions before.
Yeah.
It was nice. It was good actually. But yeah, I need to go through that to get more information on what what exactly that NFT is about and all those. So I still have a deep dive on it.
Yeah, it's really important, I think, to really have a look at metaverse coins, gaming, NFTs, because when we do go in, you go in, when we do go in, sorry, hang on a second. When we do go into, like at the bear market, if we still do get sort of like a prolonged downward trend once we top out, that everybody's saying that the crypto money is probably going to flow into NFTs and metaverse because they're not dependent on a halving, and they're not dependent on the price of Bitcoin. So people will be looking to make profits. And even now, like while we've been trading down for the last 3 months, massive amounts of money have gone into the NFT market because while the market's going down and there's not much going on unless you're actually shorting with the market with leverage, profits are being made in the NFT world. So I think it is a really good thing to start looking into. So, and on our Twitter account, we're going to be starting to put some trainings on that. I think it's something to look into as a possibility of moving some of your profits from the crypto industry into the NFT industry to prolong your profit. So yeah, cool.
Nice. Will you be at any time doing a session on that on your NFTs?
Yeah, I can do a session. I can do a session probably on Wednesday. I might prepare a training for what I think is going to happen on the top of the market and do the NFTs. So I think I'll schedule that for Wednesday.
Nice, cool.
Cool.
When you said you had session 6 a.m. to 10 a.m., that's East Central time?
Yeah, I'm on Central Time Zone. Yeah.
Okay, so that would be 7 a.m. Eastern, right? Okay.
Yeah.
Okay, cool.
What time zone are you in, Megan?
Central.
Oh, cool. Whereabouts?
In the United States,
Yeah.
I live in the South near Mississippi.
Oh, okay, cool.
Where are you?
I'm in Costa Rica, but we're on Central Time Zone.
Oh, that's right. We actually had a trip planned there and then COVID,
Yeah, yeah. We've been really lucky. There's been a lot of few cases, but there haven't been that many deaths here. So we've been really lucky with that. So,
We were excited to come. It looks like a beautiful country.
yeah, it is very awesome. Okay, guys, I will see you tomorrow or the next day.
Sure. Perfect.
Thank you so much.
Thank you so much.
Welcome.
Appreciate it.
See ya. Bye.